All right, let's speak to economics editor Tshepo Mongoai now. Thank you for being with us for our Monday date, as it were. And this happened today. Just tell us a bit more about Ubank. And of course, these links with mining communities are very important.
Absolutely. I mean, I must say, it's very sad that one of the remaining black-owned bank is actually encountering this. I think the question must be asked, is it because of management, or is it because of regulations? I think it's about time that we drill down and find out what are the challenges, especially with black-owned and managed banks. I mean, we've seen the demise of VBS, and African Bank also, it had some almost similar challenges. It was under curatorship. And now we hear of Ubank, which, to answer your question, service largely the mining communities or mine workers and communities around the mining areas.
So VBS, Tshepo, there were claims of fraud, of criminality.
Sure.
Here it's different. So you're saying that maybe the requirements are pretty onerous. And let's be clear here, it wasn't about liquidity, so they can pay out depositors. Well, they've got that ratio correct. But about capital. So explain that for us.
Absolutely. You know, in the banking sector, for every rand that you loan or you receive as a deposit, it must be backed by another rand or two in a way as a security. Should there be any substantial risk to the bank, then there is that capital that's available to address that. So in terms of meeting the deposits, as and when the depositors want their money, the bank is able to do that. But it is that capital adequacy ratio that it's kind of a security at the back end that protects depositors. So the Prudential Authority is very, very strict. They've revised the rules. They are quite stringent. So any gap that they identify, it may be that maybe the bank in some areas is managed well, but perhaps in terms of risk to the banking sector, they've identified there. It could be, you may also find that they tried to their level best to deal with this problem, but maybe because of the model that the bank is using, they are not able to address those gaps in the market.
Because of course, as you grow, then you have to inject cash somehow or buy assets. So is there any risk now to the depositors, to the mine workers?
Oh, well, the risk is that perhaps some depositors would panic when they hear this. Remember, banking, it's a bit complicated. So when you hear that it's under curatorship, I don't know if you translate it in an African language. You could use any word, because there isn't a word for curatorship. And that word can actually spark fear in the hearts of depositors. And the next day, they could actually run to their nearest bank and withdraw their money. Because if you have sufficient saving in the bank and you hear of anything that's, it's not quite good in terms of the running of the bank, surely a sensible person might, go and withdraw the money. And that's not good for the bank.
Especially after what happened with VBS. So this is about education now. We'll speak to the unions. Presumably they would want to be involved. What will the curator do you believe? There's some talk of perhaps even selling off assets.
Yeah, the plan, I think, is that they should also inject some capital, and the only way is to dilute the shares of the current owners of the bank. Obviously, the shareholders are always the last in line whenever there's a problem. Priority at this point is depositors. They must get their money in full that they've put in the bank. So a curator will make sure he gains control of the bank and he prioritizes depositors. Should measures to put the bank under curatorship not work, he must make sure that they get their money back before a bank can be liquidated.
Isn't it interesting that KPMG is the curator here? At one point, there was such concern around that organization that it wasn't doing business with government.
Absolutely. They were implicated in state capture for one or many other reasons. But what came out in the industry, especially the banking sector, was that there isn't any other organization that can actually take over and do the job of KPMG. So the issue was that let's deal with the problems and let's deal with people who are found wanting in terms of the problems that KPMG found itself in. But if we say that we don't want KPMG, that is a risk to the systems because they are quite big.
It's incredible. And the Reserve Bank is saying it doesn't want to risk any instability in the entire banking system. You don't want banks to get a bad name because that affects trust in all banking services. Is it just doing its job here, although you've said that maybe the ratios and things could be looked at, especially in terms of black ownership?
Well, remember, banking sector is quite key in our economy. We know that National Treasury, is it every Tuesday, Wednesday, they do their bond auction. And who are the buyers of those bonds? They're mainly banks. So bank is key in terms of the sustainability of our economy. If there's no sound banking, we don't have money in the economy. Our fiscus will be exposed because there are those arrangements that we have that banks must actually buy our bonds. So it's important that we keep this banking sector going. It's protected at all costs. There may be questions about the way they run their affairs, but for now, you know, it's key in our economy.
All right, we'll follow and hopefully calm heads because of those risks that you mentioned. Tshepo Mongoai, economics editor, catch him every Monday with us. All right, time for your sports.